Bitcoin and Ethereum are the top dogs when it comes to crypto. But what's the difference? In this video, we'll explore what makes Bitcoin and Ethereum unique, how they work, and which might be the better choice for you. By the end, you'll have a clear idea of their differences and which one suits your needs best. As a quick bit of introduction, Bitcoin was created to be like digital money. It's designed to be a new way to pay for things without needing banks or governments. Think of it as a way to send money directly to somebody else, kind of like handing them cash, but online. Ethereum is a bit different. It's not just about money. It's a platform where people can build applications that run exactly as they're programmed to. These apps can do all sorts of things like making agreements that automatically happen when certain conditions are met. Essentially, that means they call it a smart contract. Essentially, it's coded to where if something happens, then another outcome happens. So essentially, if you deliver something digitally, then the particular Ethereum is going to be transferred, or a different Ethereum-based cryptocurrency. It's like a giant decentralized computer that anybody uses. While Bitcoin aims to change how we think about money, Ethereum really wants to change how we use the internet. So let's explore a little bit about both and get a deeper understanding of what all of this really means, especially the smart contract stuff with Ethereum, because I know it's a little bit difficult to understand. Bitcoin was launched in 2009 as the first digital currency. It was designed to work without any central authority like a bank or a government. People often call Bitcoin digital gold because it's scarce and durable. And that really just means that there's a limited number of Bitcoin out there that can be ever mined or can ever exist, and they virtually cannot be erased or destroyed. They just exist on the blockchain. Its main use is to store value and help people send money directly to each other. If you really want to dive deeper into Bitcoin and Ethereum and their differences, check out 99bitcoins.com. They've got this page right here that goes into it a little bit more. But to simplify, if I'm looking at Ethereum is a bit different than Bitcoin because it's not just about money. It's a platform where people can build apps that run exactly as programmed. These apps can do all sorts of things like make agreements that automatically happen when certain conditions are met. It's like a giant decentralized computer that anybody can use. Some of the main things that Ethereum can be used for are DeFi, decentralized finance platforms like Uniswap and Aave, NFT platforms for, trading NFTs, DAOs, decentralized autonomous organizations, where essentially there is kind of a voting base of, things that can happen within these organizations. And then there's, metaverse applications, things like Decentraland, where you can buy digital real estate and, things like that, games and all sorts of programs like that. So while Bitcoin started the digital currency movement, Ethereum really expanded the possibilities by allowing developers to create a wide range of applications on its platform. The next thing that we're going to need to look at is the technology differences between the two, since there is a bit of background where Ethereum and Bitcoin were similar and have changed to kind of evolve and get more advanced with, the times. Bitcoin and Ethereum use different methods to keep their networks secure and running smoothly. Bitcoin relies on a system called proof of work, or POW. In POW, computers solve complex puzzles to add transactions to the blockchain, and the blockchain is just a list of the transactions that are happening from account to account or from wallet to wallet. This process requires a lot of energy and computing power. Ethereum, however, made a big change in 2022 by switching to something called proof of stake, or POS. In POS, instead of solving puzzles, people can validate transactions based on the number of coins they hold and are willing to stake as collateral. This method uses much less energy than proof of work. Another key difference is that Ethereum supports smart contracts, and as I briefly mentioned before, these are self-executing agreements where the terms are directly written into code. Smart contracts automatically carry out actions when certain conditions are met without needing any sort of middleman or, someone like a bank if you were going to transfer money to your bank to another entity or anything like that. This is a little bit of a look at that, and you don't really need to dive too deep into this. It's very technical, but the use cases are things like decentralized finance for lending and borrowing and trading platforms where, then you wouldn't need an entity like Fidelity or BlackRock. NFT exchanges, things like OpenSea. On OpenSea, yes, there's a platform for it, but you are transacting directly with someone else who has an NFT, and the smart contract exchanges the, let's say, Ethereum for some NFT directly between the two of you without anybody in between. There's some other enterprise applications or applications for large companies that are being developed right now, but generally that's kind of how these transactions go. Bitcoin doesn't have this capability. It's primarily used for transferring value between parties that are agreeing on something, and you don't know for sure that the transaction or the person on the other side is going to perform their end. So I would tell my friend John, hey, I'm going to send you X amount of Bitcoin, and then you Venmo me X amount of dollars. In this example, or with Bitcoin specifically, I have to trust that John is going to Venmo me, and he has to trust that I'm going to send him the Bitcoin. Smart contracts don't have this issue. So Bitcoin focuses on secure, decentralized transactions, and Ethereum offers a platform for building applications and agreements that run automatically when these, set conditions are met. Bitcoin and Ethereum have seen significant growth in their market values. As of January 2025, Bitcoin's market capitalization was about $1.3 trillion, and Ethereum was around $412 billion. This means that Bitcoin holds a larger share of the crypto market compared to Ethereum. But recently, 9 new Ethereum ETFs started trading in the US, led by companies like BlackRock and Fidelity. An Ethereum ETF is just an investment fund that allows you to invest in Ethereum without directly buying or owning the cryptocurrency. Instead, you purchase shares of the fund, the ETF, which tracks Ethereum price. This provides exposure to Ethereum's value, meaning that you are exposed to the investing trends of Ethereum. You can invest in it without needing to manage digital wallets or deal with crypto exchanges and things like that. On their first day, these funds collectively attracted about $108 million in investments. While this is a strong start, it's smaller than the debut of Bitcoin ETFs, which gathered around $655 million on their first day. This difference shows that although Ethereum is gaining more attention, Bitcoin is going to stay, or at least is currently, the more dominant player in the crypto world. These developments show the increase of interest in cryptocurrencies in general and the expanding options for investors looking to get involved in this space. So we understand the growing interest in cryptocurrencies, but let's talk about the differences in energy consumption and the sustainability from these cryptocurrencies, because Bitcoin and Ethereum differ significantly in their energy consumption and their environmental impact. So as we know from before, Bitcoin continues to use proof of work, or POW, which, as I mentioned, requires a lot of energy. Bitcoin's annual energy consumption is about 169 terawatt hours, which is more than the energy consumption of the entire country of Poland. This is also comparable to the energy consumption of countries like Sweden and Ukraine. This high energy use leads to significant carbon emissions, quite obviously, and contributing to environmental concerns. Now, on the other hand, Ethereum used to consume about 80 to 90 terawatt hours in comparison to Bitcoin's 169, which is still significant. But after Ethereum's big change in 2022, switching to proof of stake, its energy consumption was reduced by over 99.9%, making it much more environmentally friendly. Despite these shifts in other cryptocurrencies, Bitcoin has not adopted POS, and it continues to consume large amounts of energy. These differences highlight the varying environmental impacts of cryptocurrencies and the importance of considering sustainability in their development. Beyond energy consumption, there are also regulatory and governmental impacts for Bitcoin and Ethereum. They're both gaining attention from the government. Recently, President Trump assigned an executive order to promote the cryptocurrency industry and explore creating a national digital asset reserve, which I think is in motion at this point and already in play. This move really shows the government's growing interest in digital currencies. At the same time, Ethereum's facing some questions from regulators about its staking process and whether it should be considered a security. And, that means the government is looking closely at how Ethereum operates and how it fits into existing laws. These things show that both Ethereum and Bitcoin are becoming significant in the financial world and each attracting different types of government attention. Unfortunately, we still don't know exactly how each of them is going to be adopted and what is going to happen with, this new administration. So in addition to the government, Bitcoin and Ethereum have attracted different interests from investors and institutions, entities like banks. Many people see Bitcoin as digital gold because it's scarce, as we mentioned before, and really can be used as a store of value. This has led to its use in various financial products like exchange traded funds or ETFs, like I mentioned before, making it easier for investors to include Bitcoin in their portfolios. Take a look right here at the figure 1 where Bitcoin and Ether have emerged as the world's predominant crypto assets, and it shows their total market cap as compared to each other. Now, while the ETFs and things like that are making it easier for investors to include these assets in their portfolios, Ethereum has a platform which aims to recreate traditional finance systems without middlemen. And we can see a little bit about that in the differences here. I'll scroll down and show you the kind of key differentiators between Bitcoin and Ethereum. Ethereum also supports non-fungible tokens, or NFTs, which are, unique digital items that people can buy or sell or trade. And this flexibility in all of these different programs that Ethereum has has makes it a popular choice for creating new and innovative applications in the crypto world, especially for banking institutions, because they can create their own programs and their own contracts to execute different things, giving it immense value. So while Bitcoin is viewed as a digital asset to hold and invest in, Ethereum really has a platform for institutions to create their own real world applications, making it very, very highly valuable. Bitcoin and Ethereum are both continuously evolving, and these upgrades are important for what cryptocurrencies will be like in the future, really. They make changes to handle more transactions and improve their networks. Bitcoin is working on something called the Lightning Network. This is like adding a faster lane to a highway, allowing transactions to happen more quickly with lower fees. It's designed to make using Bitcoin for everyday purchases easier and more efficient. Ethereum's had lots of updates, and they have some pretty interesting names. They had one in March of 2024 called Denkin, and an upcoming update called Pectra. These improvements are important because as more people use Bitcoin and Ethereum, the networks need to be able to handle the increased activity without slowing down or becoming too expensive. This essentially happens because if more people are trying to process transactions, the transaction fees go up and you have to pay more just to send the same amount of money. By implementing these upgrades, both cryptocurrencies aim to provide better experiences for their users. The communities using Bitcoin and Ethereum are also very important because they have different goals. Bitcoin's community focuses on keeping it secure and decentralized, aiming to create a new kind of money that doesn't rely on banks or governments, and they want Bitcoin to be a simple and reliable way to send and receive payments. Ethereum's community is full of developers who are excited about building new things, creating decentralized applications or dApps, and all sorts of uses for smart contracts. This makes Ethereum a platform for innovation, allowing people to develop all sorts of programs that run on its network. So while Bitcoin's community is focused on making a secure and decentralized form of money, Ethereum's community is busy creating a variety of applications and services on its platform. Many people are concerned with the security of their crypto, and Bitcoin and Ethereum have different approaches to security. As we know, Bitcoin uses a system called proof of work, POW. In this system, many computers work together to verify transactions. This method makes Bitcoin very secure because it would be extremely hard for anyone to take control of the network. Essentially, you would need to own 51% of those computers verifying transactions. And at this point, where we are in the kind of life cycle of Bitcoin and, where its mining is coming from, who owns however much Bitcoin, at this point, it would be a massive, massive investment and very, very difficult to actually get that amount of Bitcoin out there. Now that Ethereum is on POS or proof of stake, people who own Ethereum can become validators by locking up some of their coins. This change was made to improve efficiency and reduce energy while keeping the network secure because it's based on the number of owned Ethereum that is essentially locked in an imaginary vault. Both systems aim to keep their network safe from attacks, but they do so in different ways. Bitcoin's POW relies on computational power, and Ethereum's POS depends on validators holding and staking their coins. Looking ahead, both Bitcoin and Ethereum have exciting prospects. Where Bitcoin is now, many people believe it's going to continue to be a valuable asset, and the tokenomics kind of show that as well. Some experts predict Bitcoin could reach a value of over $200,000 in 2025 with a potential low of $47,000. And you got to take these valuations with a grain of salt because really anything could happen and the predictions are never correct. Ethereum, on the other hand, is expected to grow in areas like decentralized finance or DeFi and non-fungible tokens or NFTs. With ongoing improvements to its network, Ethereum aims to handle more transactions and reduce fees, making it even more attractive for developers and users. So while Bitcoin may continue to be a strong store of value, Ethereum's future looks bright with its expanding applications and continuous upgrades. I've still got a few more things, but if you're interested in buying crypto like Bitcoin and Ethereum, I'll include links in the description to Coinbase and Crypto.com where you can get a $50 bonus just for signing up and trading through our link. When we look at how Ethereum compares to Bitcoin over time, we can see some interesting changes. The Ethereum to Bitcoin ratio shows how much one Ethereum is worth compared to one Bitcoin. In September 2022, this ratio was higher, meaning Ethereum was gaining value compared to Bitcoin. But by November of 2024, the ratio had dropped to 0.036. This means that Ethereum's value had decreased relative to Bitcoin. At that time, Ethereum was worth about 3.6% of one Bitcoin. These changes can happen due to various factors like market demand, technological updates, and investor interest. It's really a useful way to see how these two major cryptocurrencies are performing against each other over time. As we know, experts and analysts have very different opinions on Bitcoin and Ethereum. Some see Bitcoin as a strong store of value and believe, based on its massive size and foundational structure, that it will continue to be a valuable asset. On the other hand, Ethereum is recognized for its versatility, especially in supporting decentralized applications and smart contracts. This flexibility makes it favorable among developers and people innovating in the crypto space. However, Ethereum has faced challenges such as higher transaction fees, much higher, and some scalability issues, which essentially means the kind of number of transactions that it can handle at one time. And Ethereum really aims to address these ongoing concerns with upgrades. As we've seen through this video, Bitcoin and Ethereum each have their pros and cons. Bitcoin is seen as digital gold. Ethereum is very useful for its smart contracts and, innovation for basically being used as a platform for many different possibilities. Your choice between the two really depends on your individual goals, your interests in the crypto space as well. I'm curious what your take is. Leave a comment below. I hope this helped you understand how each of these cryptocurrencies differ and why people decided to invest in them over the last 10 plus years. If you're interested in buying crypto like Bitcoin and Ethereum, I'll include links to Coinbase and crypto.com where you can get a $50 bonus for signing up and trading just using our link. And if you found this video helpful, make sure to like and subscribe for more videos just like this one. Thanks for watching. I'll catch you in the next one. Peace.